So you were on the hook.
Okay.
If you had more than 100,000 euros in your bank account, then a portion of those assets were taken to pay back
I
the
see.
debt. We saw that the premiums for Bitcoin during that event skyrocketed.
Okay.
What's happening, Dalton?
Too much.
You're on mute. So yeah, there you go.
Not too much.
There you go.
How are you?
Doing good. Happy Friday.
Happy Friday.
Happy
Phil.
Friday Opportunities Group.
Happy Friday.
As I say,
Yes. Yes.
Brandmaster. But we're trying something a little different today.
Yes. We are.
I'm here to convince you.
Yes. You're here to convince me. What are you here to convince me of, Phil?
Well, I think Bitcoin. Well, that's what I'm here to convince you of.
Okay.
But generally, you've had, and myself as well. We've been sort of like struggling to. You keep muting that thing. We've been struggling to make our way, kind of like through what's actually useful
Right.
in this industry.
Right.
So today we're just starting with Bitcoin, just the starting point basically of crypto. But in the future we'll explore other topics and talk with other folks.
But specifically today, Bitcoin as a hedge, right?
Bitcoin as a hedge. Let's just call it like the utility of Bitcoin. Like why is it even useful at all?
Okay.
Well, I guess first before I start off with. I really just have 2 points.
Okay.
But do you want to start us off and you say like why you don't think, because you're the one who said you don't think it's a hedge. You really don't think it has. I think. Is it fair to say you don't even think it has utility, like generally?
I think that anything that someone values has value. I think if someone's willing to buy Bitcoin at $61,000, Bitcoin is worth $61,000 until no one wants to buy it at $61,000. I own Bitcoin. I run a Bitcoin node. I like Bitcoin. I have said that I don't think Bitcoin is a good hedge asset. I think that Bitcoin originally was designed as a currency, and I don't think it's an especially good currency either. So I think that I don't think it's just me that doesn't know what Bitcoin is. Like I understand the technical side. I'm very familiar with the code base. I'm very familiar with the fundamentals. I'm very familiar with how Bitcoin inflation works, how the halvings work, how the mining works. But when something is designed as an electronic cash and it doesn't fit that, and then now it's being labeled as a store of value or it's an inflation hedge, I don't know that we have enough history to say that it is a good store of value. I don't know that we've got enough data to show that it is an especially good hedge against inflation. I know we have some data, but we're talking about an asset that's been trading for 14 years, and that's its lifespan. Yeah. It's been available in open markets for less than that. Well, I mean, you could acquire it through, websites where you meet
like
people.
Local Bitcoin,
yeah, exactly,
stuff,
things like that. They weren't the masses were not participating in. Now you've got Bitcoin ETFs. You've got things like that where that could increase adoption. But is that adoption driving price? Is it people actually using it as a hedge? Is it? I think there's a lot of uncertainty, and you're talking about an extremely volatile asset. And so, I've seen harp on your points too much. I don't want to give you any advantages. But over the last 4 years, like you can look at the US dollar against a basket of other large currencies and see that there is a little bit of an inverse correlation between how the US dollar trades against that basket and Bitcoin price.
Okay. Well, I mean, it like technically has to.
Yeah,
right? If the dollar strengthens, then things get cheaper relative to the dollar, including other currencies.
Right. Exactly. Yeah. Including Bitcoin. Right. You've got the other currencies, but then Bitcoin also seems to work well in that basket. But yeah, I would just say that, like, I guess my things are is if you have something so volatile, something that has so little history, to use it as a hedge asset or to advertise as a hedge asset. Like if you're on CNBC and saying, well, you need Bitcoin to hedge against this. I don't know that if I was in a position of my responsibility is to hedge against inflation for an endowment or a pension or anything like that, I don't know that Bitcoin would be my choice.
Yeah.
As the inflation hedge.
Yeah. And even as we talk about Bitcoin and its like utility for doing that kind of stuff, at least at this point, neither of us are selling any like Bitcoin specific products. So it's like we're just here totally, discussing the utility of it as pretty neutral parties. I
Right.
think
Yeah.
you know,
Definitely
both
not investment advice or anything like that.
totally not. And I think neither of us while we're in the crypto
Right.
industry, um, you know, uh, we're relatively neutral,
Right. Yeah.
as far as this
Right.
question
Right.
goes. Um, so okay, so I want to recap
Mhm.
what you just said and make
Okay.
sure like I give it make sure I have all the parts in my head and that
Right.
we make it like the strongest possible argument.
Mhm.
So okay, so um,
Maybe some about your background as well, because I think you do have, obviously a degree in economics. You worked at a corporate pension for, the better part of a decade now. I mean, you have some expertise in this space on the economic side of.
yeah, well, yeah. So my background, I was before DigOp, I was an allocator, where I managed a uh, portfolio of hedge funds and
Okay.
other like quantitative trading strategies, and so I was allocating across trading teams and across hedge funds and this
Right.
sort of thing. Um, Mostly quantitative strategies, and so I spent a lot of time thinking about risk because my mandate there was to deliver an uncorrelated return stream, uncorrelated to traditional risk
Right.
factors like equities and bonds and this sort of thing.
Mhm.
So I've spent a lot of time like thinking about how do you think about risk, how do you think about the performance of a return stream, whatever that is.
Right.
It could be Bitcoin, it could be a stock. You're good. You're good. Yeah. You're watching out there. You're gonna mute
Yeah.
yourself, and then we're gonna spend half this thing with you muted. Um, um. So that's like I've spent a lot of time doing that kind of
Right.
thing, and I did a little bit of that here with Bitcoin
Right.
specifically, and so but again, like I want to go back to your points and just make sure
Mhm.
that we have that all laid out on
Right.
the table, and
Right.
it's clear where you're coming from
Mhm.
because I think they're good points. So I heard as far as the hedge stuff goes,
Right.
right? Um, let's start. Uh, Actually, let's start on like the actual data that we have available
Right.
because that's probably a better starting point. Is that we've only had 14 years of Bitcoin price data,
Mhm.
right?
Right.
And so then I think you're saying like whatever insights we extract from that data are going to be limited just because it's only 14 years.
Right.
It's not nothing, but we're not talking about, the S&P 500, which
Right.
we have solid data going back to like 1900.
Right.
If we really want to, there's research pieces from like AQR
Right.
and other shops where it's like they'll string together these equity prices over the
Right.
course of a few hundred years.
Right. They'll create some sort of synthetic index, basically. Yeah.
Exactly. So we're not working with that.
Mhm.
We're certainly not working with gold, which has an even longer
Right.
potential, price time
Mhm.
series. So we're limited in that we've really only got 14 years of data. And even of that 14 years of data, there's probably a really good case to be made that kind of post 2020,
Right.
we're kind of like in a very new regime for Bitcoin. Heck, even now, like over just the course of the last several months
Right.
since the Bitcoin ETF was launched, we're probably in another new regime.
Right.
And then like you said before, whatever, like I guess you had Mt. Gox very early on, but
Right.
then
So I think Bitcoin became tradable essentially 2009, 2010, peer to peer. But then you weren't until maybe 2013, 2014 that you had.
and that was a very limited market
Right.
in 20
Right.
and yeah, so in 2013, 2014 where you had kind of a robust market to
Right.
trade these things, and even then it was like not
Right.
there was still a lot of like disparity
Right.
across
Right.
like
So
geographies
you would have had
especially.
Mt. Gox, and then I think you would have had maybe Grayscale was probably around then as well.
Yeah.
Like the Bitcoin trusts.
Oh yeah, that's true.
Yeah.
That's true. But okay, so that's okay. One limitation we're working with just the actual amount of data that we
Right.
have to like measure any of the
Mhm.
claims that we're going to make, and that kind of goes both ways.
Right,
That's that's just a general hurdle that we have to work
Right.
with, and that's just reality.
Yep.
We can't change that. Okay. And so now, as far as the hedge aspect goes,
Right.
let's be more specific about what do you mean by hedge
Mhm.
asset? Like, what particular qualities are you
Right.
talking about?
So I think
And maybe
Yeah.
you want to talk about your background a little bit. As you're coming
Yeah.
from from a technical
Yeah,
perspective.
more of a technical perspective. And I did go to school for finance for a while. Like I took some finance class, some economics classes. Like I read economics books, but I would not consider myself a subject matter expert
Yeah.
on
But you
macro or
have
microeconomics.
you have the background to be able to, like, you run a Bitcoin node
Right, right.
yourself, like
Yeah.
you've like worked with a ton of these
Right.
crypto exchanges, you've so it's like you have at a very like granular level,
Right. Yeah,
but
a lot
anyway.
more technical knowledge
Yeah.
on Bitcoin itself. But regarding the hedge side, I think that essentially when I view a hedge, I'm looking for something that protects me from losses for another exposure I have.
Okay.
Bitcoin, when you talk about it as a hedge asset, is typically referred to as an inflation hedge. So essentially, the goal would be that as the buying power of the dollar goes down, the value of the Bitcoin goes up. So that
Okay.
would be, I believe, the traditional use of Bitcoin as a hedge. I haven't seen it advertised as a hedge against many other things. You don't really see it advertised as a hedge against some sort of stock basket or anything like that.
I mean, I think there's people who've tried to make that
Right.
case, but I think that's like in a lot of ways kind of like a dead argument,
Right.
But and we'll talk about why that's the
Right.
case. Like I think that it's very logical actually that that's the case.
Mm-hmm.
And the people who say that Bitcoin should be this hedge against like equity market risk, I would say like most of the time it's not. But again, we'll
Right.
talk about that more later.
Right. And like I said, a lot of it comes back to, like, let's say if we go back to when the Grayscale Trust or Mt. Gox started trading, we've got 10 years of kind of like trading data we can get. And then, as you mentioned before, like maybe like 4 years ago, like that was kind of a new regime over the last 4 years, whether that was COVID or there's some sort of economic crisis in the world and people are like opening their eyes, like, oh, Bitcoin's a good idea. And then we've got, as of the last couple of months, we've got ETFs, which have enabled a lot more institutional adoption, right? And then that's you're not starting to see companies now putting more Bitcoin on their balance sheet. That's not just like Tesla and MicroStrategy. Like you've got other companies actually put on the balance sheet. So maybe that's a new regime as well. And then Bitcoin's going to trade differently through all those regimes. It's getting, I guess, ahead of ourselves. But as far as the hedge that I would be talking about, that I believe is advertised by people that are proponents of Bitcoin as a hedge, are specifically talking about inflation. So that would be, does Bitcoin price go up when buying power goes down to the dollar? And I think there are data sets that would say it does, but I don't know that there's long enough history to provide much confidence to that.
Okay. Okay. Well, if you're not going to be satisfied with the length of history, there's nothing we can do about that, right? We can only work with what we've with what we've got at the end of the day.
Right.
So, and that's kind of just up to you. That's up to like the person on the other side, like making that decision.
Right.
We can only work with what we've got.
Right.
Okay. So you're primarily talking about the inflation aspect, like a Bitcoin as an inflation hedge. That's like your primary.
Right. And if you've got other things you think it hedges well against, like I'm definitely.
Yeah, I've got two.
Okay.
I've got two.
Great.
Yeah. So, the two scenarios that I think Bitcoin is a very effective hedge for is one, inflation, especially inflation extremes.
Okay.
I think there's good reason to think that's the case. And two is in the event of actual financial market stress. I don't just mean prices going down. I mean like stuff that's making the financial infrastructure start to break down. So like in particular, bank stress.
Okay.
Like where they are potentially insolvent, where they can potentially not meet withdrawal demands. I think that's actually the specific case is like where they potentially can't meet withdrawal demands. That's the specific one that we have data for.
Okay.
But I think you can extrapolate that into like sort of other, financial stress style scenarios. Okay. But so those are the two. Those are the two that I think we can make a case for. And I think like so first of all, let's talk about the inflation one.
Okay.
Because I think this one's a little bit easier.
Right. Inflation's a hot topic these days.
Well, it's a hot topic, and it's just a little kind of easier to observe, I think, these effects. Because we have, it's like you're talking about the problems with the data sets.
Right.
Inflation, we have kind of monthly data. For the one about financial market stress, that only happens every once in a while.
Right.
It's like even if you tried to measure that over the last 100 years, we're talking about like several
Right.
occurrences.
Yeah.
Even then, it's like, is that really? It's kind of like a little more of an art at that
So you're
point.
you're talking about something more severe than just Silicon Valley Bank can't process withdrawals.
That's going to be one of
what
the
your
examples.
Okay.
That's going to be one of these because it's like, again, we only have so many of these occurrences.
Right.
We have to work with what we've got.
Got
But
it.
there's a few data points that I've got on that bank
Okay.
side. But let's start on the inflation one.
Got it.
So, I'm going to pull up a chart.
Let's do it.
Yeah, but
Still
we're
knock
gonna
the
have
camera
to
down.
this little chunk. We're gonna have to edit this part out,
Okay.
because it's gonna take me a second. Okay. So I realize for the viewers, this does not look nice. This is not a nicely. Here we go. There, that's as good as we're gonna get. Okay, so this chart that we're looking at here, I took 4 assets:
Okay.
Bitcoin, the S&P 500,
Okay.
gold,
Mm-hmm.
and tips. So Treasury inflation protected securities.
Okay.
Okay, so the performance of tips are directly correlated with inflation.
Okay. And when you say inflation, are you talking about actual dollar supply, or are you talking about like some sort of cost index?
Yeah, so these are like securities. So tips are an instrument from like the U.S. government.
Okay.
So you can go buy tips,
I see.
and they will pay you an interest rate that is directly paid out based on CPI.
Okay.
So
Cool.
that's
So it is cost. Okay.
yeah, it's explicitly linked to CPI, the inflation index.
Got it.
Okay. And fine, you can say like whatever problems you have with CPI, like whatever.
It's the best we got.
This is a good thing here. So okay, so what did I do here? I took the monthly returns of tips of Treasury inflation protected securities.
Okay.
And sorted those returns.
Okay.
Right. So we've got the worst to best monthly returns of tips, and I just took the average returns in each quartile. So if you take the monthly returns of the inflation protected securities, and then you rank those from worst to best, and then chunk those out into 4 chunks, and then just take the average.
How many months are we talking about here? Each.
It's a good question. We're going back to 2020 here. 2020 to now. So 4
So each
and a half years
quartile is like 12 months. That's 12
yeah,
individual months grouped together. Yeah.
roughly.
Got it.
Yeah, a little more than that.
Okay.
Okay. So, and I think this is like a decent time period because we have had kind of like both.
A lot of stuff going on.
A lot of stuff going on since 2020, right? We've had inflation kind of burst to the upside.
Right.
We've also kind of had like some, because that inflation went up so high, we've also kind of had deflation.
Right.
Like relative deflation, right? Because it's like some cooling of inflation rather. So, okay. So if we look at so we're taking again, the returns of all of these different assets.
Okay.
In the different regimes basically for inflation as measured by the performance of Treasury inflation protected securities.
Okay.
Right. So these are like market participants are buying these things, buying and selling these securities, these inflation-linked securities, and the government's paying you a coupon on these. So it's a pretty good representation of at least market expectations for inflation.
Okay.
It's a decent one. There's other ways you can measure the inflation, but I just wanted to go with an easy one. Just an easy one. Okay. So showing here, ranking those in red, that's the tips. So you can see that here. So here's the worst on the left-hand side. That's the worst quartile of months for tips. So
what does a bad month for tips mean?
It's going to mean that inflation expectations are decreasing.
Okay.
Right. So like the market's expectation of inflation is decreasing. And then the best up here, people are like, oh, inflation's higher. Let's like buy tips.
Okay.
Right? So ranking these returns. Okay. And so now we have now in blue Bitcoin, in orange the S&P 500, so equities, and then in green gold.
Okay.
So the traditional inflation hedge that people would think about.
Right.
Okay. Now the thing is here is that you need to keep in mind that all of these assets, all that are shown here, these are all going to have an inflation kind of like risk factor embedded in them.
Right.
Right. And that's just because if inflation is very simply linked to the money supply, if money's going up, money's becoming less valuable, then things that are that have some sort of scarcity or have some sort of
Right.
productive
You got to put that
cash.
money somewhere. And
Yeah, so like if inflation increases, like usually equities do pretty well, gold does pretty well, and I'm going to show here Bitcoin does pretty well. So you can see here that they all have sort of this positive correlation with inflation expectations. All of them do. Right. And of course, the Bitcoin bars, like the Bitcoin changes in price over those different regimes for tips, are way larger than the other
Right.
assets, but Bitcoin's also much more volatile. Right.
Right.
So, how can we think about measuring Bitcoin's effectiveness in a very simple way in these inflation regimes? So all I did here was I just took how much money do you lose I'm sorry, how much money do you make when inflation expectations are in the highest quartile? So when there's the highest inflation expectations as determined by the market by the performance of tips, divided by how much money do you lose when those inflation expectations go to the other side or the worst quartile.
Right.
So what I'm trying to gauge here is sort of we call this in finance, like what's your convexity to that bet? What's your convexity to the inflation expectations? Because ideally, on the upside of that risk, when inflation is especially high, you're making a lot more than you lose when inflation expectations are really low, right? Like if you were to go buy a put on the S&P 500, you want the payout of that put when the S&P 500 blows up to be way bigger than the cost of your premium in those events, at least, right? Okay. So what we're looking for here is for this value to be higher.
Yes.
We want more upside than downside in the inflation regimes, in the extreme ones. That's what we're looking at here. And so if we, and this is a way to sort of attempting to control for the volatility of Bitcoin relative to these other assets, right? So, so a way to normalize that. Okay. So when we do this, we see Bitcoin over the last 5 years has actually been the best performing inflation hedge in these regimes as measured by the highest inflation expectations versus lowest inflation expectations. So you can see that here in this chart. Bitcoin in the you kind of get this a little more than a 2x payout when inflation has its highest. There's the highest change in inflation expectations versus the lowest, like a 2x payout. S&P 500, you're kind of getting like a 1.25. Gold is second place. You're kind of getting like a 1.6-ish, somewhere around there. And tips is the worst in this case, actually. So Bitcoin relative to these assets actually ends up being historically, in this lens at least, in this lens, the best performing inflation hedge, from this like convexity perspective. So that's point one.
Okay.
That's my case for point one.
Okay.
You want to stop on this one for a second? What do you think?
I mean, I guess one thing I have a hard time with, as I mentioned, the data, like if you got 4 years, which is not nothing. Like it's 4 years that a lot of things have happened within. You've had mostly a lot of inflation. You've had some cooling of the inflation. But then you've also got just this tremendous volatility in Bitcoin. And so I'm sure it depends a lot on what your stomach is for that volatility, I guess. But if you're looking specifically for an inflation hedge, and gold is not quite as good, but it's pretty good, or your S&P, your basket of equities is pretty good, like it's also hedging against inflation, why would Bitcoin be the preferred choice considering that volatility?
So volatility can actually be your friend in this scenario, right? Because that makes it more cash efficient as a hedge, right? So if you have a portfolio and you have some return objectives, right? So let's say that like your return seeking asset in your portfolio are equities, right? And so you own the S&P 500, and then you need some kind of like, let's say you need inflation hedge on top of that, right? So then it's like you need equity risk plus inflation hedge risk built on top of that, right? And that's for whatever reason. That's just because of like the mandate of you as an investor. Like let's say that you're like a foundation, and you have to, you need to pay out like a certain amount per year, and your return bogey that you have to meet is like inflation plus
5.
inflation plus 5 or 3 or something
Right.
like this. And so in order to meet that objective, um, you're going to have some basket of return seeking assets, and and then you want some inflation on top of that. So okay,
Right.
so you can't just own tips
Right.
in that scenario, because then you're just making inflation. You got to have the return on top of that. So then are you going to own, is it tips plus equities?
Mhm.
How much equities is that going to be? Is that going to be enough?
Right.
Right. Well, what you could do is, and again, not financial advice, blah blah
Right.
blah. What you like a potential scenario is you could own a bunch of equities, and then because Bitcoin is so volatile, because it actually gives
Right.
you that payout in those scenarios that you care about,
Mhm.
those inflation scenarios, you could just own a little bit of Bitcoin.
So like in the chart previously,
Yeah.
you could essentially, or what I would extrapolate from that chart is that you could spend half the money on Bitcoin that you would have spent on tips.
Or half on gold, right?
Right,
Like in this
right.
scenario, it'd probably be like, let's say you got to own Bitcoin's whatever. Let's say it's 3 times more volatile than gold,
Okay.
right? Like, let's say that's your thing that you're using.
Mhm.
Well, now your portfolio can be, what would that be? Let's say you need like $90 of S&P 500,
Okay.
and then you need $10 of gold, right? Well, instead you could do whatever, like $97 of S&P 500 and $3 of Bitcoin. So
Right.
now you have this more cash efficient portfolio, and then if you extrapolate that range out, then it becomes more and more extreme, right? So
Right.
say it's like you need, I don't know, $50 of equities, S&P
Right.
500, and then you need $50 of gold.
Mhm.
Well, with Bitcoin, you could say like divide that by 3,
Right,
kind
right,
of
right.
deal, because it's more volatile, and historically, who knows if that's going to play out. Historically, you've actually gotten a more convex payout
Right.
in those scenarios.
Right.
So you're potentially actually getting even more benefit
Right.
in those inflation shock scenarios, which is, again, if you're an inflation sensitive investor, what you care about. So, yeah, I mean, that's my case for Bitcoin as an inflation hedge.
Right.
I guess just to recap that one more time, I don't think the volatility is a bad thing.
Okay.
Volatility can be your friend if you are a portfolio manager.
Right.
It can be, because then that allows you to be more cash efficient in your exposures, and in being more cash efficient, you can actually achieve a higher expected return, potentially with less risk.
Right.
Right. Just, we'll beat a dead horse here. Volatility does not exclude any asset from a portfolio.
Right.
That just probably is going to dictate its size within the portfolio.
Right.
Right.
So based on the history of Bitcoin, at what point do you believe it became a good inflation hedge? Do you think it started out as an inflation hedge, or do you think there was a turning point of like, we've got enough information to know now that this could belong in the inflation hedge portion of a portfolio?
I think that probably since 2020 is a good kind of time frame, like 2019, 2020, because then at that point we had like pretty darn robust crypto markets. Before, if it, it's like the 2016, 17 period, like that bull run and crash that we had, going to like 2019, so like 2016 to 2019, that, like, I think there was a lot of what we'd call idiosyncratic risk driving that time period, or like
Right.
basically before 2019. I think the idiosyncratic risk was very high in
Right.
crypto, just like it's being driven by its own kind of like factors of adoption or whatever, right? As it becomes more and more well known. Yeah, that's my opinion.
Got it. Yeah, I guess for me, as I mentioned before, like I do have concerns about the history of Bitcoin, like just the lack of price history compared to gold or the S&P. Like if someone said, not that they would ask me for financial advice, but if they were, like, what would you do to like hedge against inflation? I'd probably just say like buy an S&P index fund. I think that when you go into something like Bitcoin, you're kind of investing in the technology and the assumed adoption of the technology, is my opinion. Of like, if I'm buying Bitcoin, it's because I think that it's going to become more useful to people in the future, so more people are going to buy Bitcoin. I think that right now you have a lot of potential still regulatory concerns. Some of that stuff's getting cleared up, and then you have like kind of, I mean, we saw that Russia is like legalizing Bitcoin mining. Does that affect the US's future opinion on Bitcoin. If Russia or China become like more Bitcoin powerhouses, like maybe the US is like, oh, maybe we do something a little different here. And so I think there's still a lot of like haziness around what Bitcoin is, what Bitcoin does, how other people view Bitcoin. Whereas like you already have this basket of stocks. Like if they're printing more money, people are going to be buying more stocks. Stocks go up. Like that's how I would view stocks as an inflation hedge. Is like people are getting more dollars, you got to bid the stocks up. Like that's just how it has worked. With gold, I think gold has performed well against inflation. I think, even for that, I'm not sure that I'm convinced that like you could say like forever it would. But I think for stocks and equities, like I can logically come to the conclusion like if there's more money in people's pockets because the dollar is worth less, stock prices go up because people are spending those dollars.
And the value of like the machinery goes up and all that
Right,
stuff.
right, exactly.
The hard assets.
Yeah. The value of those businesses goes up in dollar terms. But with Bitcoin, I think that, and unfortunately, there's no data that could. We've got data, but
Yeah, I just showed you some.
I'm saying I don't think we will know for a while, and I don't know how long that time is. But I think if we're saying like in 2020 to now, it has performed well against inflation. I don't know that the data points we have are convincing enough to choose it over your S&Ps and your gold. Unless you're comfortable with that volatility, which, like you said, like maybe sophisticated portfolio managers are comfortable with taking that volatility, extrapolating out.
You don't have to choose it over one or the other.
Right.
You don't have to. Like you can just take some of your budget away from whatever, like within your inflation book.
Right.
Not every asset manager has an inflation book, but there are plenty of endowments, pension funds, sovereign wealth funds, this sort of thing that do have like an inflation book that they run.
Okay.
And I would actually say, like, for those books, it's potentially really useful.
I think we're seeing some people do that as well.
Yeah, and I think it actually makes, like, if I was running one of those books, like, I'd take it seriously. I'd be like, wow, this makes a lot of sense. Like, if I see that I'm getting sort of, like, much more efficiency, going back to that payout chart, right? If I see that recently, at least in my more extreme scenarios, I'm getting more bang for my buck out of my BTC book relative to like gold or my tips or whatever. It'd be like, that's pretty good.
Right.
That's now, it's like I can put potentially less cash to work in that inflation book, and I can go pop that in private equity or whatever, like whatever thing that is that they want to put their money in. So, yeah, but I mean, to go back to what we said at the very beginning, if you're not happy with the data that we've got, there's not much that can be done.
Right.
We can only work with what we have.
I think what it has been proven is that it is, at least to me, it can potentially be a good inflation hedge.
Okay, that's
It's something. Yeah. But
I'd say I would take that statement just a little further, and I would say, historically, over the last 5 years,
yes,
it has been
right.
It has been a good, actually convex inflation hedge, based on like what I just showed here.
Right.
Does that happen in the future? We don't know that for any asset.
Right.
We don't know that for any asset. Right. Yeah.
Yeah, I guess for me, if like I'm someone who is hedging against inflation, like to me that seems like a long-term goal.
Yeah.
Like when you're hedging against inflation, I don't think you're thinking of, I want to hedge against inflation for the next 3 months or for the next year. I feel like if you're making that decision, and I'm sure you can rebalance, right?
Sure.
Your inflation hedge, but I'd want, if I'm thinking I want to hedge against inflation for the next 10 years, I'd probably want something that has 10 years of data hedging well against inflation.
Oh, you'd want much more than 10 years, right? Like 10 years would be a pretty short time frame. So yeah, like you're not, if you're one of those PMs at one of these large allocators, at one of these large institutional allocators, where your the overall mandate of the entire portfolio is like, we got to be able to pay whatever needs are meant for our university endowment. We have to be able to pay back our pensioners. We have to, be able to meet whatever requirements of this, sovereign wealth fund are as dictated by whatever body gives them that, their Congress or whatever the heck it is that gives them that mandate, you're going to have this giant diversified portfolio.
Right.
And in order to meet any of the objectives of that portfolio, you have to make these sort of like really kind of like broad bets
Right.
on any of those underlying asset classes.
Okay.
Right. Like it's very challenging for those sort of allocators to make these like to make like a micro bet.
Right.
And so then it's like they kind of have to look at it from the perspective of what's our overall mandate. There's going to be, then like a risk team or something like this that's then going to say, okay, here's our mandate. Here's our model allocation across, say, our privates and our publics, our liquids. And then, within that liquid, so that public market book, there's probably going to be some kind of like or there may or may not be some kind of inflation thing. Right. And then I think it actually makes sense that Bitcoin would fall in that. Okay. I mean, just based on what we're seeing here in that inflation book, and then we'll go ahead and move on to our second point, because I think that you've made your point that it's like the data available is limited and fine. Like that's where we are.
Right.
There's nothing we can do about that.
Yeah. And I think like if you're looking at it as a component to a basket of assets that are an inflation hedge.
Yeah.
Sure, you can put it in there. You can put anything in there.
No,
you can put
you
orange
can't.
Futures in there.
No, you can't. No, you can't. I think that's straw manning it. I think that's straw manning it. Like, of course you can put anything in there, but what's going to actually work? What's going to be actually effective, right?
Right.
And useful. And so, but yeah, like I hear you could have like orange juice futures, in like some kind of commodity book,
right?
Right. But I think that. Man, we're jumping all over the place here, but I guess just one other thing before we move on to my second point eventually. Here,
okay, well, let's say it's
no. Hang on. Let me make this point. Is that when you look at something like commodities, let's say it's like, why should commodities provide you with a positive expected return?
Mm-hmm.
There can be a component of the return of a commodities basket that could come from futures roll, so you can make money just from the roll of futures to spot price. But like other than that, like why should it provide you with a return above inflation? Like, maybe there's like a commodity expert who like has a really good case as to why that is. But in terms of just owning like a generic commodity basket, like I'm not sure there's really. Right. I personally would need a little convincing myself that that commodities would be a good, like, or not good, but that they would provide you with a return above inflation, other than the component of return from the futures contracts and from the futures roll themselves.
So
hang on, let me finish. But then it's like you have to talk about convexity at that point, right? And so then I think you talk about Bitcoin. It's like, should Bitcoin provide you with a positive expected return? I think actually let's say like the really long, like if we're asking this question again 10 years from now, let's say, and this is in a scenario where Bitcoin's gone up a bunch in price because it's been like adopted as like an actual component of books in this way, like as this inflation hedge or like whatever, some kind of like, I would actually say at that point, like I would have to be convinced at that point, again, like 10 years in the future, 15 years, 20 years, whatever the heck this time period is, I would have to be convinced that Bitcoin would provide you with a positive expected return beyond inflation itself. Because right now it's like the positive expected return from BTC is basically, it's like, okay, you get this inflation hedge component, you've got this, we'll talk about again, like I think this like financial infrastructure meltdown kind of return component. Right. But then like the other return component that you have here is basically like adoption, is that there's more people available to buy it and adopt it as part of that portfolio. And so that provides you with convexity in your return profile. Just by nature, more people buy the thing that don't already own it.
Right. I do want to talk about the commodities thing, because you had mentioned that if you were going to be convinced that a basket of commodities would be a good hedge against inflation.
I didn't say that. Okay. I didn't say that. I said, like, I do think it could be a good hedge against inflation. I'm just saying that what I said there specifically was, I said that it would take convincing that commodities would provide me with a positive expected return beyond inflation itself.
Right. So what
and aside from the futures roll component, aside from the risk premium that you receive from futures roll as they come down the curve.
How many years of data would you need to convince you of that?
That it provides me with that positive expected return?
Would you be satisfied with 4 to 5 years?
No, I'd probably need like 100, or like or like 50 or something like this, Yeah. I would need a lot.
Got it.
Right. Okay. Yeah.
Okay, so
I'm watching.
not muting.
Yeah,
All right, so now on to, you want to talk about the financial meltdown stuff? Or?
yeah, let's do
Okay.
it. So yeah, the other hedge that I think Bitcoin provides, and we have data for this, is in the event of financial infrastructure meltdowns. So again, I'm not talking about prices just going down.
Right.
Because, okay, so let's be clear here. If prices are just going down, that's like very likely correlated with a deflation scenario. In that scenario, Bitcoin will probably not perform well because there will be a maybe in the future, if Bitcoin becomes this like high quality asset, then maybe it's a component of like a flight to quality kind of return stream. We're not there yet.
Okay.
We're not there yet. Right now, flight to quality is going to be U.S. dollars, cash equivalents, so short-term treasuries. I would imagine still the Swiss franc is probably a part of that basket. JPY is probably still a part of that basket.
Okay.
Historically, these are sort of like safe haven assets.
Okay.
Or these things. Um, gold, I would say, is not even necessarily a part of that basket.
Okay.
Like, I think we saw that gold performed well in like 2008, but again, that was in the event of sort of like actual, like, people were like, oh, the world, to be fair,
people were stocking up on bullets too. They thought it was going to be rough.
Yeah, exactly. There's like, it was like people were like, the world's ending.
Yep.
Right?
Yeah.
Right? So why do I think Bitcoin is good in these scenarios where it's like the actual foundations of our financial infrastructure melting down? We have a few good data points. Again, this does not happen very often. Right. So if you want to go build some quantitative model to assess this risk, you're going to have a bad time.
Yeah.
It's going to be very challenging because we only have a few of these. In fact, I'd say we really only have like
two,
effectively, right?
Since
in Bitcoin's lifetime.
Because even 2008 was pre Bitcoin.
Yes.
Bitcoin was
like 09, and at that point, like I would say at that point in time, it was driven by idiosyncratic factors. It was just they were just.
A lot of people say that Bitcoin, I think it was mentioned in some of the forums and stuff, that like the crisis of 2008, 2009 is
inspired
what inspired Bitcoin.
Yeah. Okay. So the two data points that we have, or I guess like the 2.5 you could call it, are what was it, the 2014, 15, somewhere around there, Greek and Cyprus banking crises.
Right.
So this was when the sovereign governments of Cyprus and Greece, they couldn't pay back debts.
Right.
They couldn't pay back debts. So what ended up happening was the governments shut down people's bank accounts. You could not get your money out of your Greek and Cyprus bank accounts.
So when you say they could not pay back debts, what would be like?
Like
would
the
that
sovereign government could not pay back
that'd be
their,
like
their
U.S.
sovereign
not
debt
being able
to pay back treasuries.
Got it.
Yeah.
Okay.
And so in order to meet that obligation, it's like in these scenarios, so it's like with Greek and actually I was about to say Greece and Cyprus being EU countries. I'm pretty sure that's true. I'm going to edit this one out. I'm going to double check myself.
You got me doubting it.
And okay, we're back. Yes, they are EU countries. I just double check myself there. So yes, and they both use the euro. And so
got it.
Greece and Cyprus, their sovereign debts, the payments required on their sovereign debts got to a point where they could not pay back those. They couldn't pay back their interest payments. Right. And so because they use the euro, they basically don't have control over their domestic.
They can't make more dollars.
They can't make more dollars. They have to
Greek
go to
dollars.
Exactly. So, what ended up happening was they, who became on the hook to pay back those interest payments were the people in the country.
The Greek citizens.
And the Cyprus citizens. Yeah. So they closed down people's bank accounts, and then what they did was they haircut people's assets. Pause this one more time. Let me see how much that haircut was. Okay. So in 2013, Cyprus did in fact haircut people's bank accounts.
Okay.
Right. So you were on the hook. You were the sort of as like a corporate bond, if you will. It was like you're the the machinery, you're the assets on the
Right.
other side for recovery to pay back those debts is the people, right? So Cyprus haircut people's bank accounts, and then Greece,
When you say haircut your bank account, you had 10,000 euros one day.
well, it was above 100,000 euros.
Okay.
If you had more than 100,000 euros in your bank account, then a portion of those assets were taken to pay back the debt.
I see.
Yeah, right. Pretty crazy.
Yeah. Yikes.
Pretty crazy.
Yeah.
And then Greece, when they had their banking crisis, they ended up not haircutting in that instance, but there were they closed down people's access to accounts, and there was the real risk that they were going to do the same thing because these happened kind of like in relatively quick succession of one another, the Cyprus and Greek crises. So in that scenario, this was we're talking basically a local Bitcoin. We mentioned that earlier. It was the kind of the only way you could swap was to go to people and swap, right? We saw that the premiums for Bitcoin during that event skyrocketed.
Okay.
In those regions, so the premium skyrocketed. Also, the Bitcoin overall went up in price during those periods, and it was definitely more of a nascent asset at that time. So both outright Bitcoin went up in price, and also locally there were large premiums to buy Bitcoin because these people in these countries were like, how the heck do I want to not have my haircut or my bank account haircut?
Right.
I got to get as much money out of this account as I can and get it and swap it out.
So they were able to pull money out of the account. They were just anticipating a haircut.
Probably just before. I don't know the exact mechanisms that occurred. Yeah, they were probably anticipating it, and then they were probably trying to get it out as fast as possible. And that's my guess.
Got it.
But this is what happened.
Mm-hmm.
We have
But the risk there was the haircut. There was no risk of euro destabilization or anything like that because it was a fairly.
This
small,
was a regional.
Yeah. Okay.
A regional thing. Yeah.
Got it.
Well, it depends on who you ask. At the time, there were people who were like, "Oh, this is the end of the eurozone" and this sort of thing. But
I mean, it definitely, from the Greek and Cyprus standpoint, it makes it seem like they probably would have benefited from not being on the euro and having their own currency. Yeah.
Well, yeah, that's another topic though. One at hand. So that's one example where it did. This is real. This happened, right? And the other one that I would bring up is what happened in Q1, end of Q1, March of 2023, when we had very recent when we had the the Silvergate collapse and the other Silicon Valley Bank. Yeah. Silicon Valley Bank was the main one, and then that sort of cascaded out into into other banks, and this looked like it could be a meltdown.
Yeah, it seemed like there was 3 or 4 banks and it wasn't going to stop.
Yeah, it was pretty spooky, right? Yeah. Bitcoin outperformed in that period.
Right.
I brought this up to somebody else and they said, well, the NASDAQ did well also. Let's call it risk assets did well also, or certain risk assets did well in that time period. And so I was like, okay. And so I went back and I looked at what happened during the Greek crisis, and during that period NASDAQ didn't necessarily do well in that period. So it's there's not, again, it's you only got a couple data points here or a few, it's you can't do it's hard to do that sort of forensic analysis at that level.
Right.
But I think that the evidence that we've got looks pretty dang good that in those events Bitcoin actually is a nice hedge in the event of actual, financial infrastructure collapse.
Right.
Yeah, I'm done. I'll let you take it from there.
I can see both of those. I think with the Greek and Cyprus thing, Bitcoin being viewed, especially back then, is oh, this is a good way to hide money. If I was trying to hide money from a bank, putting in Bitcoin is probably a good way to do it. People wanted to buy Bitcoin, price goes up. Price goes up globally because there's a Bitcoin sink in Cyprus and Greece, I guess, at that point, people trying to get a hold of it. But I think I'm not as well studied on that as you. I don't know what the volumes would have been. I don't know there's price data, but I don't know if there's if it's local Bitcoins cash and people are sending you Bitcoin to your wallet. I don't know if we have actual trading data on what that looked like in that area.
Well, we know there were premiums.
Right. We do know there were premiums.
We know that, yeah.
But I mean, I could see that that argument. It's not something that And I would actually say that that was probably one of the reasons I was a little bit slower to adopt Bitcoin originally. Is like I had never really thought about a bank failure.
Yeah, but
Yeah.
also, I mean, like both of us, we're in our early 30s. It's
Right.
like we were in high school in 2008,
Yeah. Yeah.
right? It's like we kind of, you know, lived through that sort of like through
Right.
our parents,
Yeah.
and, like we weren't necessarily like doing complex analysis at
Right.
that
Right.
time of like global markets when that was happening,
Right.
right? Um, so it's I think it's for us, for Americans generally, probably people in the West generally
Right.
who are kind of like, I don't know, younger than like 35
Right.
maybe. It's kind of like hard to relate to that generally
Right.
because we've never really lived through like a true financial market meltdown. If you're in the crypto industry, you've lived through some
Yeah.
serious
Well, I think
meltdowns in a very short period of time.
even anybody that's not, I would say, somewhat sophisticated financially, like my parents during the financial 2008 2009, they weren't thinking, oh, I need to stock up on gold, or
Yeah,
I need to
right.
like that's just I don't think that
Sure,
that's what
sure.
the general population thinks about.
And I think that there were actually quite a few people thinking about that in '08. I think
Yeah,
there were people who were like, "Oh,
I
I
think
need to
there
get my
were
money in
people, yeah,
gold."
yeah,
You
but
know what I
I
mean?
wouldn't say that
I mean, it
that
still
is
happens
everybody.
now.
Yeah, yeah, yeah.
If it's happening now, it's like it's had to have been on like
Right.
steroids
Yeah,
in
I'm
like
sure.
'08.
Yeah,
Yeah.
yeah,
And then I mean, I think you have good examples of places like some of these like South American countries, like these places where there's like hyperinflation
right.
regimes, and then you hear these stories about how Bitcoin's really useful for them to sort
Yes.
of like get out
Yeah.
of, um, you know, kind of being on the hook, being the one who's taxed
Right.
basically for
Right.
the government spending
Yeah.
through the hidden inflation tax.
Yep.
Um, yeah,
Yeah. Well, yeah, I think that if you are concerned about financial market meltdown, or just financial infrastructure stress, as you put it,
I think to say that you shouldn't be concerned about it would be quite short sighted.
right?
I think it'd
Yeah,
be
yeah,
short
I
sighted
agree with that.
because it happens. It's
Right.
happened in the United States,
Yeah.
and it wasn't that long ago. It was not that long
Well,
ago.
so then your outlook has to either be that
It's a potential scenario,
it is a
right?
potential
Yeah.
scenario. So either you believe that those, like both of those events that you said, those
Yeah.
were eventually resolved, right? I don't know what the long term impact was in Greece and Cyprus, but like in the U.S., the banks shut down. Things got a little like weird of like who's taking over those assets and accounts and things like that. But if you're talking about long term financial meltdown, right? If you're talking
Mm-hmm.
about like the everything just blown up, I don't know that like and right now the Bitcoin infrastructure, you got to swap that back to dollars to actually make it useful in the U.S.
Okay.
Like if you want to actually buy something with it, and maybe things go real wild, like you can send Bitcoin to a guy, buy a tractor, buy a farm, and
Okay.
get your own homestead.
Mm-hmm.
But if you're just trying to protect against like short term financial stress in these markets, I could see that. I just don't know that many people that are doing it. But I mean, yeah, if you've got a list of things you're trying to hedge against and that's in your list, then yeah, I think Bitcoin's a good option for that.
I mean, yeah, it's especially for these, I think like large allocators, that's definitely on their list, right?
Right.
They have to exist through multiple
Yeah.
regimes.
If you've got
right,
100,000 pensioners, like
it's
that is something you need to be
like
concerned about.
oftentimes have like a for like an endowment, they have a perpetual life,
Right.
effectively,
Yeah.
right? Those are things they have to think about, right? Because they need to exist through those scenarios.
So why, we've actually talked about this a little bit, why Bitcoin over any other digital asset?
Over any other digital
Yeah.
asset? I mean, yeah, it's a good question. I think that the risk.
It's a lot more tradable now with ETFs than other digital. Well, I would imagine if you're in a situation with financial stress, I don't. We saw this with, I don't know if it's a financial stress situation, but when you had the Bitcoin Trust, it traded off from Bitcoin significantly sometimes.
Sure, yeah, there can be like a liquidity event.
Yeah.
Right. Yeah, that can definitely happen. But yeah, like disregarding like the vehicle that you use to actually put that view on. I mean, like the ETFs are going to be like, bankruptcy remote and all this kind of stuff. Right. So unless the United States government, says something like, we're going to renege on saying that ETFs are bankruptcy remote or whatever, like that, that would be different. So why would someone own Bitcoin over another digital
Well, I guess
asset? I
just
think that's
is there something unique about it that would make it better than
I think
anything
that
else?
that's a really good
Maybe
question.
another topic for another day, maybe.
Maybe. Um, I mean, I think I have a pretty contrarian view to
Okay.
most people on like on the digital assets as a store of value kind of thing
Right.
of as to that idea. Because my contrarian view is that I think if there's a sufficient level of decentralization for that asset, where like any given sovereign government actor would have a very hard time completely shutting it down.
Right.
Right now, even for Bitcoin, that's like potentially a risk, right? Like I think over half the hash powers in China.
Yeah.
It's like if the Chinese government was to, and they probably like it that way, right? Like the Chinese
Right.
government's probably because it's getting into Bitcoin, like the on ramps are shut down in China,
Right.
right? There might be some changes I think coming up soon to that, but the on ramps are shut down in China because it's. I think that's actually another good data point is that government has like the highest of any government in the world has like the highest incentive to keep in place strict capital controls on its population.
Right.
China's kind of like a roach motel for capital. It's like you can get it in, but getting it out is a totally different story. And so yeah, they've got all that hash power. It's like, what if the Chinese government's probably like, oh yeah, this is actually pretty sweet that we've got 53% or 57% of the hash power, the miners in our country, because if we really had to, we could go knock on their door and
Right.
and like shut it. And so then you might have this event of like Bitcoin forking in that
Right.
event, right? It's like you have the Western Bitcoin and the Eastern
Right.
Bitcoin or the China Bitcoin
Yeah,
or
yeah.
something, But I think if you have an asset where there's a sufficient level of decentralization, because at the end of the day, like the value provided by Bitcoin as the store of value is that it's just a very effective way to say this person owns this much and that person owns
Right.
this much. It's just, it's the ledger that everyone talks about. And so in order to maintain that ledger effectively, you need to have a sufficiently decentralized set of scorekeepers
Right.
all checking against each other to say this is true, this is not true. And
Right.
those are the miners. So if you had a bunch of decentralized, if it becomes like really trivial to build that level of decentralization, like what if Dogecoin is decentralized enough? I think
Right.
people are like, oh, Dogecoin, it has a silly name, and it's like, okay, fine. Like maybe from a branding perspective, it loses value from a branding perspective, but is it like sufficiently decentralized? I don't see why it couldn't have value
Right.
in it
Right.
because it's like then an effective scorekeeping mechanism. Like I don't see why Bitcoin Cash couldn't meet that.
Right.
Whatever, like some of these other dead
Or any new thing. Yeah.
or any new thing. Yeah, if it just becomes super, if I think that's a risk that if it becomes, if in the future it becomes, like okay, if I was a malicious actor in the
Yeah,
government,
real naughty boy.
well, yeah, a real naughty boy, or I was just like I gotta make sure I can put my finger on a red button to shut down Bitcoin if I
Right.
really had to. What I would actually work towards is not to control the network. I think that would be probably too hard. I would work to make it so that like regulations are set up in such a way where it's actually really easy to spin up nodes.
Mm-hmm.
I would try to make it really. I would want to make it. What's the word I'm looking for? I would want to make it trivial. That's
Right,
right.
right.
I would want to make it trivial to create a decentralized network, because then if I can make it trivial to just create
You're not saying trivial to participate in Bitcoin. You're saying trivial to create your own
yeah, decentralized
to
network,
increase competition.
And then you have Bitcoin 1, Bitcoin 2, Bitcoin 3, Bitcoin 4, call them whatever you
Right.
want, and they're all super decentralized. I think that's a risk to Bitcoin because then at that point it kind of becomes like, well, if the whole value that this thing provides is just keeping score, but then all these other things can keep score in like exactly the same
Right.
way, then why wouldn't I go and own these instead of that? Then you have like a potentially infinite supply of this
Right.
stuff, right?
Well, you've also got things like Tether's got essentially tokenized gold. Like if that had adoption, why would that be less advantageous than Bitcoin? I mean, there's the centralization of the gold stores and the Tether organization and things like that.
Yeah, I mean, like
guess.
someone
Yeah.
could go and they could step into the vault and say, "This is ours now."
Right. Right.
Right. Yeah.
That makes sense.
Yeah. Well, I think I've said everything that I can say
Okay.
for the most part, at least for this moment. Maybe
Got it.
in 10 minutes when we jump off, we'll be like, "Oh, I wish I said that."
So what we have is a brief data set where, well, not to discount what you got. We've got a few years of Bitcoin,
Call it several.
several years.
Yeah.
Yes. Several years of Bitcoin outperforming or performing well in inflationary periods.
So I mean, well, yeah, in inflationary periods, and then potentially like a decade of data in financial meltdown, super duper stress.
Yeah, two data
scenarios.
points, decade of data.
2.5.
Yeah,
It's pretty good. I mean,
Yeah.
like again, you don't get many of those
Right.
in even in recent history, right?
Yep. Yeah.
It's pretty good.
Yeah.
It's like those are black swan events that,
Yeah.
right,
Very
that
true.
can potentially just take you out.
Yeah.
What about any parting words? Well, you get the last word here.
Yeah, no. I would just say that as of right now, from like if we're looking at catastrophic financial system meltdown, current Bitcoin on and off ramps are too important for me to think of it as a great hedge in that situation in the United States. Just because I don't see enough kind of Bitcoin infrastructure for me to be able to actually put it to use. Like I would still, there's got to be a bank somewhere.
Well, there's things like Thorchain that exist now, right? Where Thorchain is like its own decentralized exchange, right? Or you have the decentralized exchanges built on Ethereum and this sort of stuff,
Right.
but then you have Thorchain, which is a decentralized exchange that's its own network, so you can swap like native Bitcoin.
But if I got to
to
go,
assets.
but if I've got to go buy groceries,
Yeah,
the Bitcoin's not doing much for me.
I mean, it
unless
could,
I
like
can
not
off-ramp.
yet, but then if there's
eventually,
if like people start accepting it as payment,
Yeah.
then why not?
Right. Yeah, that's true. If it is accepted as payment.
Yeah.
And I'm sure there's countries where you can, tap your card and it's a lightning thing. But in the US right now, if the financial system melts down, I don't think holding Bitcoin's great for me. I mean, well, I guess
disagree with that.
in some portion, I guess you would have Bitcoin, but you still got to have cash. And like you're not, depending on how long you expect this meltdown to happen, if you're not able to convert that Bitcoin to cash, I feel like you're in a bad spot.
If you're not able to convert that Bitcoin to cash, you're in a bad spot. Well, sure.
Yeah.
Like maybe. I mean, maybe.
Yeah.
Like, I don't know. It's.
Hopefully we don't find out.
I guess, but I don't know. I think you could. Like again, we saw with Greece and Cyprus, there was a premium.
Right.
A premium.
Okay.
Right. So actually, I think we in the data we have available.
Yes.
Which is like not a ton.
But this
in the data we have available,
Yeah.
there was a premium. So if you held Bitcoin, you were benefiting in that scenario.
Okay.
Because you were selling it to the euros. Yeah, it was local Bitcoins and it was a pain in the butt, but it's like why couldn't that happen again? Why couldn't you do a local Bitcoin?
But didn't you
swap?
say this was people that had over 100,000 euros in the bank and they're trying to not have it haircut, so they're essentially just trying to hide that cash? I'm talking about a situation of like all you've got is Bitcoin. Let's say you have all your money in Bitcoin and the system melts down. I don't think that Bitcoin is as useful as the less valuable cash.
Is as useful as the less valuable cash. But well, why? Why? But if there's a meltdown,
if there's no off ramp,
no. If the off ramp would be like you could go like, well, okay, I don't want to get into like these sci-fi scenarios of like how exactly the mechanism would exist to swap from.
Well, I think that's pretty important.
I mean, at that, okay, we're like really moving into some kind of like speculative territory.
Yeah.
Now,
well,
right?
That's what this is, though. I mean, the
no,
idea
it's
of a
not.
financial
I did not
system
give you
meltdown.
speculation. Like the data points that I gave you
If you were
things that actually happened.
If you were hedging against a financial stress event that melts everything down, that is a speculative thing.
That's fine. That's fine.
Yeah.
I of course,
Right.
Of course. But any portfolio that you construct to meet the demands under that given scenario is going to be a speculative thing as well, right? That's not like restricted to Bitcoin,
Right.
But the data that we have to work with, I gave you. This drives me because you're not the only person that says this. Let's be clear.
Right.
But it's like when other people say this. And including you in this, it drives me crazy because it's like, what do you want? Like, this is what we have to
I
work
want to
with.
be convinced.
This is the data that we have to
Right,
work with.
right.
And it worked.
Yes.
It worked.
It worked.
And so it's like, okay, that's not enough data for me. I can't, nobody can do anything about that.
Right.
Nobody can do anything about that. We can only work with the data we had in the past and then make construct some kind of logical argument for the future.
Right.
Right? And so the data that we have and that shows these past scenarios
Is that the people that were hiding their money from the government in Greece and Cyprus by buying Bitcoin didn't have their money haircut?
Is that the people who wanted to escape those capital controls that could potentially lead to financial loss for them because of a meltdown in the actual financial system at the sovereign level, if you held Bitcoin at that point in time, you were doing well in that
Yes,
scenario.
you made money if you were able to sell it to somebody. Yeah.
If you were able to sell it to somebody, because there was a premium for you to own Bitcoin at that time. You were the exit for those people.
Right.
You were the exit for those people.
Okay.
So I mean, it's like at this point, I think I haven't heard any rebuttals.
I'm not trying to convince you of anything. You're trying to convince me that this is a good hedge against financial stress.
Yeah.
And so we've got the Greece and Cyprus thing.
Okay.
And it performed well for the people who had Bitcoin.
I said you'd have last word, but doesn't look like that's happening.
All right. So people who had Bitcoin in Greece and in Cyprus.
Yeah.
Before, I don't know what the timeline exactly like, but the people who had it before, they're like, oh wait, Greece and Cyprus can't pay this stuff. When they started to sell it to people that wanted to get their money out of the bank account, they made money in that situation. I understand that.
They made. I mean, let's just like we can. I think we can make that just like more kind of concise. Is just that if you held Bitcoin, you were paid a premium.
Yes.
Like your liquidity was the premium asset in that scenario.
Yes.
Or your not your liquidity, your asset was the premium asset in that scenario. Yeah.
Was there a premium on gold?
I don't know. It's a good question. It's a good question.
Bitcoin's easier to move around.
There
with
probably
gold.
was, right? Like
Right.
you could probably go do that with doing like gold coins. Like
Right.
that probably was a thing,
Right.
right? Where you could swap gold coins with
Right.
people. That wouldn't surprise me. Yeah.
Okay.
But that doesn't defeat the
No,
argument.
it doesn't. It doesn't. No,
Yeah.
that was more of a curiosity. Like,
Yeah.
yeah. Bitcoin in that situation, Bitcoin is a lot easier to move around than a big old bag of gold.
Totally.
I get that. Yeah.
Totally. Yeah.
Yeah. Those are two great instances, Phil. Thank you for sharing those.
I think you don't want to be convinced.
I do want to be convinced. I just
So then what's the problem here? What's the problem? Because we just looked at, I gave you data.
yes.
I gave you actual things that have happened.
Yes.
I gave you measurements even in inflation.
Yes.
Even in inflation and
Yes.
see that Bitcoin is potentially, like you could potentially argue, over recent history has been a superior mechanism
Mhm.
in the tails of inflation on the when you look at the upside versus the downside inflation
Right.
regimes in the short history.
Okay.
Yeah, we've got a short history, but I mean it's like I feel all I'm hearing from you at this point is that we don't have enough history.
Yes. That is.
I don't
feel
think
like
that's
a
a
valid
good.
point.
I don't think that's a good. I don't
When-
think that's a
when-
good
when you s-
argument because
when you-
I gave you data. I gave you like actual things that have
Yeah,
happened.
if we go back to, you said that a basket of commodities futures, you would need hundreds of years of data to prove that it outperforms inflation.
Sure, yeah,
But you're fine with 4 years of Bitcoin data.
it's not okay. It's not 4 years Bitcoin. We're talking more like a decade of decent.
Well, what you
data.
showed me in that chart though was 4 years,
Sure, it was
Yeah.
4.5.
and that convinced you that it was a good. That doesn't make sense to me that you could need hundreds of years on one thing and 4 years on another thing.
No, dude, you are. You're stuck in the world of yes. We're talking about the world of substitutes, but I think you're stuck in the world where substitute means it has to completely replace all the others.
Okay.
I think that's what you're. Where
No.
you're coming from here.
You said that in order for you to think that it was a good hedge against inflation, this basket of futures, you would need hundreds of years of data. But this is a good hedge against inflation with 4 years of data. I don't see the difference.
That's just a relatively better data set, right? But if we're working with the data that we have now,
Right.
if we're working with that data and we observe it,
Right.
we observe like what has happened, it looks pretty good.
Okay.
It looks pretty good. And I think there's a logical case that makes sense. There's like a first principles case that it makes sense that like why is gold useful as an inflation hedge? Why do you think that is?
I have no idea. People think it's good as inflation
If
hedge.
you don't have any idea, then what? It doesn't sound like you want to be convinced. It sounds like Gold
is a good inflation hedge
make an
because
argument
people,
for it
for what?
for gold as an inflation hedge.
I don't have an argument for it. It's been proven to
What-
be one.
It's
The same that you just showed it in charts of the same 4 years that you used to justify Bitcoin. Gold outperformed inflation. But then we actually
Bitcoin
have
did even
hundreds of
better.
years. Yeah, Bitcoin did better over the last 4 years, but we have hundreds of years of gold.
okay.
Yeah. We've also got a lot more people that want gold than Bitcoin right now.
Really? Well, probably
Yeah,
that would make sense.
I
To me.
think that
That makes sense.
Yeah.
Yeah, because Bitcoin. But but you say that, and I would be like, oh, well, again, like if I think about the potential return, the factors that contribute to the return of Bitcoin, if we break it down to these sort of like first principles factors, it's like you've got this inflation hedge component. I showed you the data as to why recently that looks like it could be the case. You've got this like financial market meltdown component, and I think in that component of return, it's potentially a better hedge relative to gold because it's so much easier to protect. It's so much easier, and then you've got the final return component that in this very simple 3-factor first principles model. You got that final return component, which is adoption, basically. That there's just more people that could potentially start using it as that component of their portfolio, of their total wealth. You know, that so there's sort of is like this additional convex upside just as that happens. That'll go away eventually.
I do think having some Bitcoin is a good way to protect yourself from financial system collapse. I give you that.
Okay. So you're convinced on that one.
Well, yeah, but when we came into this, I was not thinking of that as something to hedge. Like I was thinking like prices, right? Inflation, like hedging against a systematic
eventually
advantage.
that would be prices, right? Because in that scenario, you'd basically have everything struggling.
Okay.
Right. Your equities would be struggling, right? Like your bonds would be struggling. Right. It's just like basically, so your like equity linked assets, which is basically like every growth asset, private equity, venture capital, public equities.
Right.
So your liquids and your illiquids, and then your sort of like your rates linked assets, which is linked to like the ability of your sovereign government to pay back stuff.
Right.
Those are both going to be struggling in that like super duper tail scenario. I think you could imagine that's like a pretty far end of the spectrum in that super duper tail scenario, right? Because then you need sort of like banking meltdown, and you need that to then cascade into, we're not going to be able to pay back sovereign interest payments on the sovereign debt.
So if someone said, Phil, I'm going to hedge against inflation, what's one asset?
One asset.
Would you say Bitcoin?
If I had to pick one asset, and my only goal was to hedge against inflation, that's it. That's all I care about.
In this situation, yes.
In this situation, and it's just inflation, I would pick tips.
Tips,
because it is explicitly made to hedge it. But that's all. That's like all you're getting.
Right.
Like it's a relatively cash inefficient instrument in that scenario.
Makes sense.
Yeah, but we're talking like it has multiple components to its return.
Yeah, of course, of course.
Yeah. So okay, and there's probably also a case to be made that it's like, okay, if we're talking about like the Monte Carlo simulation of just like everything that could happen,
right?
You know, it's like somewhere in that Monte Carlo simulation is like the freaking government blows up or whatever.
Yeah, you probably don't want to hold a bunch of tips if you're also hedging against financial system
if your
stress.
counterparty in that instance is the government itself, is the sovereign government, right. And so, what else we got to talk about? Keep going. No, this is not it.
I would say
I'm frustrated with this conversation. Does not end this way.
I will say that I probably, certainly according to you, I would say I probably undervalue the risk of severe financial market stress.
I mean, it doesn't matter if you undervalue it. Like it's not the case that I'm making. I'm just saying, like in that event, I think it's a really good one.
Well, you'd have to have it before that event. If you're already in the event, buying Bitcoin is not.
Yeah, you're going to be SOL, right? Because you're the one paying the premium.
Yeah, exactly. So you would have to
have it beforehand.
You had to be sitting on it.
Yeah. True.
Exactly.
Yeah. I mean, that's the way it works with like any asset, right?
It's not a hedge if you buy it.
Yeah. Wait.
You want a softball here? What do you want? I don't. At the end of the day, I don't think we have enough data to say that Bitcoin is a good inflation hedge. Unfortunately, I think we could look at that chart 100 times and be like, yeah, it looks pretty good over the last 4 years.
Looks great.
Yeah. Okay.
It looks great, right? Yeah. And this has been like an actual inflation scenario.
Yes, it has been. Yeah.
This has been like a most recent time in U.S. history, like where we've had real inflation. Like last time was whatever, like 70s, I guess, right? Like that was. You don't want to be convinced. Look at this guy.
I mean, you saw tremendous price moves up because you have ETF announcements, ETF adoption, people doing all these things. Like I I don't think there's enough data to show that like long term it actually does well.
Well,
When there's not this.
the ETF stuff was just like January.
Yeah, but this
that
has
was
been
just like
that's when
8
they were
months ago.
approved. But I mean, this has been years of like filings and people talking about it, moving.
Yeah,
them
but
all forward.
we weren't looking at the absolute performance of Bitcoin. We were comparing its returns. We were comparing the downside to the upside.
Right.
That's what we were looking at. Right. It wasn't just like, oh, Bitcoin went up more than this other stuff. It was no, when inflation was down, it lost less relative to how much you made on the upside.
Okay.
That was what we were measuring.
And our time period was 2020 to now.
2020 to now.
Okay. So in 2021, what Bitcoin was $60,000 in November 2021, and it's $60,000 today. I'm
Dude,
sure.
like that's not what we're talking about. Like, see, like what do you want from a hedge? Right? Like, what are you looking for from the hedge?
I'm looking for something I can reliably expect.
You want something that's always going to make you money, regardless of the scenario. That's what you're saying. That's not.
No,
that's not
I'm
a
saying,
hedge, dude.
I wasn't talking about hedge right now. I'm saying like the last 4 years of data.
Yeah.
There's a lot of stuff going on with Bitcoin.
Yeah.
You know, we had all-time highs, we had lows, we're back to all-time highs.
I think this is a great scenario to then measure its effectiveness, right? Because it's like since 2021 or whatever, it's like Bitcoin's like flattish or 2022, I guess, whatever the heck it is. It's like flattish. So you have like, you definitely do have like an up period in that data set, like, without a doubt. You have this like really big performance. You know, give me 2 seconds.
Okay.
We're gonna do a little edit out of this portion. I'm gonna take a look at the data.
All right, let's see the data, Phil.
Should be able to do this pretty quick. Let's see if I can't. I'm really afraid that I'm gonna run this and it's like not gonna look good.
Could have. It's a good thing we didn't do it live, I guess.
Oh, this is actually going back to 2019. So
this would be pre-COVID.
Okay. So we'll select a period where it's been kind of like
Bitcoin is flattish.
Bitcoin's flattish, slightly up. So we're going to go August of 2021 to today. And this might not be good because the inflation really happened. No, it did. It happened in like when was the core inflation?
Like when did prices go up, or when did the money get printed?
Like all the inflation that happened, it was like 2020 into 2020 into beginning of 2021.
Yeah,
so
I'm not
kind
sure.
of like removing that period.
Why would you do that?
To just see how it performed in like the regimes that we had after that. So I don't know if this is a good measure, but if it confirms my bias that we're going to go with it, it never happened.
Got it. Yeah, I don't know. I haven't seen like a chart of CPI. I'm not sure how that's actually done. How often do they update CPI numbers? Is that a monthly thing? Gotcha.
That's why I'm using tips, because it's like...
Because they're traded?
Yeah, because it's traded. So it still looks good, but the data doesn't look like it's changed. So gold looks the best.
What was that?
No, gold looks the best.
Are you sharing this on the screen? No, interesting. Gold does look pretty good there.
But we're removing... We're removing... Now it looks as good as equities, basically.
Okay. Yeah. A little less, a little not as good. I think we were to draw a line if we could level up. Outperform tips. This guy's cherry picking data sets.
I wasn't cherry picking. This was the original data set that I had before.
Yes, yeah.
Anyway. Yeah.
You gonna put that up there?
No, I'm not gonna put that up there. I'm gonna keep making my case.
That doesn't seem fair. doesn't seem appropriate.
Well, here we'll. All right, so we'll again.
Not this one. Just trying to trick me. Put the same chart up again.
Okay, so if we do look at the returns,
right
now we're looking at August of 2021 onwards.
Okay, why did you pick that time period?
Basically, like Bitcoin's like flat.
Okay.
Over that period, so if we look at August 2021 to now, we see that sort of like convexity measure. So how much you lose in the worst periods for inflation for tips versus like the highest inflation. Since 2021, gold looks better.
But that doesn't mean that Bitcoin has been a bad hedge against inflation during that time
It's
period.
been about as good as the S&P 500.
Right.
In this case, by this measure.
Right.
By this measure. So, you know, yeah. So if you remove the 2020 to most of 2021 time period, then yeah. I think that now we're gonna take a look at some more data.
All right.
Okay, so if we're looking at the what happened to CPI, what happened to inflation?
Okay.
There was rising inflation, year-over-year inflation, all the way through, basically through, like it was really kicking off into August of 2021. So it was like in this initial jump in inflation, like this initial chunk right here, we're taking that out.
Okay.
When we just looked at like Bitcoin underperformed gold, we're taking out this initial leap in inflation expectations. Now, inflation did continue.
Right.
It continued to sort of like grind. It continued to grind up, right? But we were moving when the year-over-year inflation kind of went from sub 2, jumping up to 5.5.
Right.
Right, and then it continued to grind up. So like inflation did continue, but in terms of like a shock to inflation, we were moving that period. And this is something that I've seen from some other research recently, is that Bitcoin tends to perform better during the like when inflation is shocked.
Okay.
Right, like during the more we go from low to all of a sudden it's high, like it tends to do better in those periods. And so there's other people that have pointed that out.
Right. So it seems to just do well when there's turmoil, like whether that's financial infrastructure stress, inflation shocks, things like that. Yeah. Chaos is good for Bitcoin.
I mean, in these specific scenarios, I think if your chaos is going to be purely deflationary, then as in like a flight to dollars, like so what we just saw with this whole like yen thing, right? Like that was like a liquidity crunch. It's people needed dollars because they had to go meet their dollar liabilities, right? They had to go meet their liquid liabilities, so then they have to liquidate and go back to stuff to go cover their debts, right? And in that instance, it's going to be the thing that debts are denominated in, right?
Hour and a half.
It's been a long one. Well,
it's been a good chat, Phil.
Yeah, you got all right.
We'll do it in 10 years, and then maybe we'll have enough data to have an actual answer.
This guy. What do you want? You gotta act on what you've got.
That's true, and what I've got is a lot of other alternatives for inflation hedge.
So you think like gold would be?
I would say financial market stress aside, it would probably be S&P.
I think there is like a case to be made. You could almost have a strategy, this sort of like inflation hedge strategy that could be some like composition of both gold and Bitcoin, probably like a couple of other assets in there to kind of cover the entire spectrum of inflation expectations. And what could be really interesting with that sort of strategy is that you could build this like really cash efficient inflation protection strategy where you're sort of covering these different, because it's like, okay, let's say that gold is better when inflation is generally high. It's maybe not as clear that it's as effective when there's a spike in inflation all of a sudden. Yeah. So then it's like it could be some combination of gold plus BTC, and then maybe something else kind of like lumped into there. Yeah. Like there could be something else. But I think that, there's an interesting case to be made for that. But you said earlier, like if you had to pick one asset to hedge against this one particular thing, well, there's always going to be like something that is explicitly linked to that explicit scenario, right? Like if I needed to hedge equity market risk, and that was what I had to do, my most surefire way of doing that, like if I need to hedge my S&P 500 risk, is go buy S&P 500 puts, but that is going to lose me money, over the long run. Like that is a losing trade. It's only going to make you money in that extreme scenario, and then you got to be like a wizard at liquidate, getting, cashing that trade out, right? You got to have some superb market timing, right?
I mean, if someone came, I'm not a financial advisor by any regard, but if someone was like, I want to preserve my buying power.
Yeah, and none of this is financial advice. We're just thinking this through, right?
Yeah. If someone's like, I want to preserve my buying power of this cash I have, I probably just tell them an S&P index fund. It's easy to get into. It'll do fine. It has done fine. I'm sure there's instances where it hasn't done as well, but
Yeah.
as far as like, I probably wouldn't say Bitcoin.
Well, you know, if you live in this black and white world where you only need one thing to do everything.
Well, I could have a basket of things.
Well,
It's
you
the
just
S&P.
said, you just gave this scenario where you're like, oh, I'm going to use this one thing.
Yeah, it's an
you're
S&P
saying
index
it's like a
fund.
basket.
Yeah, it
Yes, so
represents a basket of things. Yeah.
Yeah.
But if you launch a vehicle that is a little bit of gold, a little bit of Bitcoin, and something else, maybe I'll be able to recommend that. But Bitcoin standalone, I don't think is proven to be yet.
So people can't build their own basket as well.
I guess they could. Huh? Yeah. But if someone's asking me, what's a good inflation hedge? I wouldn't say a little bit of this, a little bit of that, a little bit of this, a little bit of that.
All right, this guy.
But if you're worried about the world breaking down, banks not having any money,
and then your equities are going to be
you can get
worth nada.
Yeah.
And then you're sitting over here, Dalton. You don't have a bunker that you built in your backyard.
I got some Bitcoin. I got my node.
Loaded up.
Yeah.
You haven't loaded up on your what is it, like your
my beans.
Yeah, exactly. Your bags of beans. And
a bunch of ramen and boxed couscous. I'm good to go.
Well, yeah. And then you got no Bitcoin either, and then you got none of that. You're up a river.
Yeah. What happens if the infrastructure, the technology, the pipes, the internet that goes
There's
down?
An EMP that detonates in the atmosphere and melts down the infrastructure. There's a solar flare.
If you had to, final question.
Okay.
If you had to rank the risk of financial market collapse, internet infrastructure collapse, do you think financial market collapse is the higher risk?
Yeah. Because I mean, it happened in 2008, right? Like, yeah. It happens.
I'm talking,
it happens every once in a while.
Yeah. But like, we made it through that.
Yeah, of course. Of course. Like
I'm talking like game over. Like Bitcoin's all you got because the world blew up.
That's like to me we're talking about like a sci-fi.
Well, this is
we're talking sci-fi scenario.
Yeah. We've established that you're wrong about inflation.
Then my hedge is bunker in the backyard.
Bunker bullets and
bunker. Yeah, exactly. That's my beans in the
bunker bullets and beans.
Right.
It's the Phil Hedge.
Well, we're talking about like now I'm like in Fallout world.
Yeah, exactly.
I gotta go. You know.
Yeah.
It's rally together my band of survivors.
Yes.
If that's what we're talking about, like that's really like sci-fi,
right?
Video game kind of scenario. That's like Mark Zuckerberg gets to plan for that.
Yes.
He's the one who he has the capital to go build a.
You think he has a bunch of Bitcoin?
Probably.
He probably has a good
He's probably got some. Yeah. I mean, like,
why wouldn't he?
Why wouldn't he? I mean, he's at that point, like, if you're, if we're talking about like the marginal utility of planning for these different scenarios, right? It's like once you have enough dollars.
Yes.
The marginal utility of owning things to protect you from financial market stress, like you can protect yourself from that, and then you have enough dollars, and it's like, okay, now it starts to make sense to like spend some of these to go build a bunker in Hawaii,
right?
That's or whatever, or stock up on my beans or something, right? I don't know. I'm sure there's plenty of what do they call them? Survivalists who would be like, it's actually pretty easy. Yeah, the preppers. Yeah, it's pretty easy to actually get your beans. You know, okay, fine, cool. Like that's.
We'll get one of them
why
on
not?
next.
I think that's like, that could be
tokenized beans.
Tokenized beans. There you go. Yeah, tokenized real world asset, tokenized beans. I am like really. This caffeine is starting to wear off. This has been.
So this is you admitting defeat. Is that what this is? If I won. It's been a pleasure, Phil. I look forward to doing it in 20 years, and I'll be like, Phil, you're right. Look how well this has performed against inflation.
This has been miserable. Yeah. I've given you data, and you're just like, oh, okay, well, I don't accept data.
What if I gave you 4 minutes of data? I was like, well, I don't know. Chips are more expensive now, and Bitcoin's gone down. What's the deal with that?
I can give you 4 minutes of data.
You gave me the universe equivalent of 4 minutes.
The universe equivalent of 4 minutes of data.
Very little bit of data.
So if I gave you a lifetime's worth of data, that would be enough. 100 years is universe equivalent of a second of data, if that's the argument you're going to make.
If you show me 100 years of Bitcoin data, I'd be like, wow, this looks pretty convincing.
This freaking guy. Do you know how to steel man an argument? I don't think you do.
Is that what you've been doing this whole time?
Yes, I have. I started off and I steel man
you said your tricks.
What's that?
You got all these tricks you're pulling out on me?
Tricks?
I don't know.
What does that even mean? Some sort of
steel man in me. Accusing me of straw manning, gaslighting. You got all sorts of stuff going on.
There's some gaslighting going on. There's something like that. I don't really know what gaslighting means, but it feels like that's what you're doing.
I see.
I'm gonna
All right.
accuse you.
The end of my argument is
I got to hear more of this.
we've got a very volatile asset
Yeah.
with a limited history.
Yeah.
And I'm not convinced that it's a good hedge against inflation yet. I surrender the fact that it could be a good hedge against inflation in the future.
And is that not good enough when your portfolio exists in a world of probabilities?
There are alternatives that I would prefer if my goal is to hedge against inflation. But I also like Bitcoin. Like, I got it. But I would view it as, one exposure to the NASDAQ. It's a tech thing.
Does your risk exposure to Bitcoin, if there's a probability that it pays out, you're multiplying that probability, times your, the potential payout in that scenario. Does it have a meaningful risk budget in your portfolio? Not dollar budget, risk budget. Because I would say potentially if you have a 50 vol asset, right? Put that in perspective, like SP 500 is 15, 18 vol potentially. Like that's actually, somewhere around there.
I would say that
so you got
am currently allocated cash and Bitcoin exclusively.
Sounds like I win.
I don't think so.
That's it.
It's been a pleasure, Phil. Looking forward to having a real guest on next time. Somebody who can actually convince me of something.
Yes.